Let's check in now with pro trader Alan Knuckman, the chief market strategist at Paradigm. Hello to you, Alan. The stock market gained last week and is on track to gain again this week.
Hello, Angie. As you can see, it's colder into the fall, but stocks are warming up.
Do you see any indications that the S&P could pop back to 4,000 anytime soon?
All right, it's still all about the macro market. Now, some positives here. The S&P has been trading between 3,600 and 3,800. Technically, that targets 4,000 on the upside. The VIX is solidly under 30, and the dollar is diving down. So these should all relieve the pressure on stocks for now.
Your new trade is a chemical stock that's been quietly flatlining. What's your options play?
All right, let's talk about this week's trade trigger, DuPont. Now, this is a stock that was 35% off its peak from January at $85. It's been trading sideways here between 50 and 60 for 3 full months. A breakout of that range to the upside targets 70. We also see what I call bullish divergence, meaning new lows, but not new highs and implied volatility. And that's how bottoms get put in. And that's what saw this bounce in the S&P in general as well. There's also a gap up at 65 to fill. So the way to play here is with a January option, 3 months at a time. The January 50 call, again, that's the bottom base. That option is trading for about 8 or 9 or so right now. And if this stock gets back up to that 70 level with that projected technical target, again, let's remember that was there in June, that option will more than double in value.
Tell us about your trading day takeaways.
All right, trading takeaway number 1, FORE, as in F-O-R-E. Watch out here. The 10-year yield is dipped below 4%. That's very significant psychologically because the dollar is down. Dollar's down at 1-month lows and under 110. So it looks like that dollar strength may be over for now. And number 2, 10% off. We're 10% off the bottom in the S&P in just 2 weeks. Now, this is interesting because we talked about earnings season coming up and that could be a catalyst. It has. And this reminds me of what we had in June when we saw a 20% bounce off the bottom with good solid earnings numbers. And number 3, Fed facts. All right, this raising rates has taken us all by notice here over the last year or so since they've started this, but it's gotten results. That's the key. Oil is still 30% lower than its peak. And again, the dollar has topped out with that key reversal we saw in September with new weekly highs and a lower weekly close. But most importantly, what the markets are telling us, and this is the futures markets and short-term rates, that rates are relaxing. And once we get out to 2024 through 2030, the rates are going to relax down to 4% in the short-term rate.
Thank you, Alan, and enjoy the UP.
Thank you.
Go to businessfirstam.com for where to see our show on TV.